morning, everyone, and to our value clients. We welcome you to another edition of our weekly market review, and we hope you will find this report and this review useful in taking a decision about your investments. In the course of last week, equities market lost another 0.52%. The all-share index also closed 97,612.51 basis point. By the time we compare that to what market recorded in the previous week, we were at 98,125.73 basis points. That has actually moderated our year-to-date return to 31.23%. And of course, we had already anticipated that last week may not be a market or a bullish market because two activities took place last week, Monday and Tuesday. The MPC Committee of Central Bank met, and then it was expected that they are likely to tinker around the key policy parameters. And do also forget that on Wednesday as well, we also had primary market auction, so which is likely to move funds away from the equities market. So in terms of our trade turnover, last week we did higher trade turnover than the previous week, 1.98 billion against 1.6 billion in previous week. And in terms of value, the value was lower, 40.72 billion against 42 billion the previous week. Financial service firm still remained the most active and the dominant player industry in our equities market. In terms of the trade turnover, financial service firm still cornered away 1.5 billion units of shares worth 30 billion, and they also contributed to 79.41% in terms of the volume to the entire market transaction for last week, and 74.56% to the volumes and the value. In terms of the key drivers of the market activities last week in volume and value, we could see the Access Holding PLC, EcoBank PLC, that's the EcoBank International Incorporated (ETI), and the United Bank for Africa traded 1.1 billion units of shares valued at 20 billion. And in terms of contribution, they also contributed 50.67% to the volume and 49.40% to the value to the entire market transaction in the course of last week. The depreciation, the downward trend we recorded in the all-share index also reduced the value or the size of our market capitalization by 0.52% week on week. If we look at this other graph, on Monday, we could see this graph is just to showcase the movement for the entire 5 trading section of last week. And we could see on Monday and Tuesday, we saw some moderation in our equities market. On Monday, we had 0.5% as a gain. On Tuesday, we also had 0.1% as a gain. But thereafter, Wednesday and Thursday, and then at the close of the trading session on Friday, market moderated on Friday. So that was the reason week on week markets stay close positive and negative, because we had the trading section as negative against 2 trading sections that were positive. So we have also talked about the financial service firm. They still contributed majorly to our equities market, indications that that industry is still the most liquid sector in our equities market. In terms of sectoral performance, it cornered 80%, aglomerate 6%, consumer 4%, and then others also cornered 10%, where we have construction and other sub, they also fall under the purview of others. And our sectoral performance at the close of last week too, we could see our NGS industrial also close positive, because in the course of last week, 3 major players in the industrial segment of our market, that's Beja Paint, recorded gain 20.55% in terms of the price appreciation. It opened 12.35, 12.35 kobo on Monday, and at the close of the trading section on Friday, it closed 14 naira 90 kobo. The same thing, Lafarge also gained 4.48%. So their impact, we could see their impact in the NDS industrial, where we had 0.19%, oil and gas as well. We also saw renewed interest in the Seplat, which is also a very highly capitalized stock, and consumer goods too also gained 0.31%, because at the opening of the trading section on Monday, Nestlé opened at 820, but because of the week, Nestlé gained 80 naira and it closed 900 naira. And then that 9.7% in terms of the price gainer also contributed to what the OGS index expanding by 0.3%. Why NGS banking, NGS insurance also closed negative because we could see profit taking those securities. In our Monday presentation, we placed those securities on hold. So our year-to-date return, we are still at we are still lower, moderated to 30.54%, and then our week to date for the entire, our quarter to date, we are at minus 6.65%. Market breadth still remain negative. So this is just to showcase our dividend analysis and capital gain, and this is just an extraction from our weekly recommendation. So last week, some of these securities were placed on hold because we are anticipating that CBN may likely to increase or tinker with the MPR. And because of the volatility of these securities, we believe that their prices are likely to also moderate because people will take advantage. But in the course of the week, we could see Access Bank at moderated to 16 naira 40 kobo. So after with valuation and other parameters that have been factored into the banking activities. So for this week, we are placing Access Bank on buy recommendation, and then GTB is also on our buy recommendation. And the Stanbic IBTC, we are also placing it on hold because we also anticipate further profit taking in Stanbic IBTC. So after in the subsequent review, we'll see that price is likely to moderate, but for now is on hold. UBA is also our buy recommendation. Zenith Bank has also come to 30 naira. Plus, is stock is also 30 naira. It's also a buy recommendation. Fidelity Bank is also buy recommendation. United Capital, we anticipate further profit taking in United Capital. We are also placing it on hold. Flour Mill, we're also placing it on hold. UAC is also our recommendation. We have seen the result for Q1, and then some other corporate information that is likely to improve the performance of that company in the subsequent quarters. So under conglomerate, we also place it on buy recommendation. Unilever is also on buy recommendation. And West African Portland Cement, I've said it last week, it gave 4.76%. It's also trading below the true valuation. So we're also placing it on buy recommendation. Okomu Oil, we're also placing it on buy. Fresco on buy. Mayer and Baker is a sell because the price is trading is above the valuation. And when such activities happened, it's better you take exit position, and then you can come back later when prices comes down. And then ICO Insurance is also buy recommendation. Massa Insurance is also buy recommendation. NEM Insurance, we're also placing it on hold because we're also expecting further profit taking in NEM. At the time price also moderates to the level below the intrinsic value, you can also come in. For Southern Insurance, we're also placing on buy. Total is also on buy. While Seplat, Energy, and MTN, we are placing those stocks also on our old recommendation. This 21 stock or we have in this recommendation, they cut across various indices, the insurance, the banking. So at least you have various options you can take from any of those if you want to have a combination of a well-consulted portfolio, not only banking. But there are other ones, you see it in our recommendation, but this is just an extraction of the major secure or stock that are really driving our equities market. This is just an extraction. So you can look at it and take advantage of the current market price, even though the market is still going down. But the truth is that some of the information we have seen coming to the market, they're also very good in helping in our market. So in terms of macroeconomic updates, no new information other than the fact that the MPC also increased the interest rate by 150 basis points. Do also forget that in our Monday presentation, we expected that it's likely to be within 100 and 200 basis points because of the value of a figure of inflation for the month of April. So central bank is still keen and still eager to ensure that inflation is also moderated, which is the reason why they also took that action by increasing it by 150 basis points while leaving other parameters variable. We believe over time, as soon as inflation begins to moderate, central bank is also they are also going to slow the way and manner they are also tinkering or raising those basis points in the area of monetary policy. So for now, they also increase the interest rate. We are likely to see improvements or fund movements to some segment of the fund, I mean, to the money market and fixed income market, because that will also affect that. We'll talk more about that by the time we get to the presentation in the money and equities and the fixed income and money market report. So in terms of another catalyst we're also expecting to drive the market this week, we've seen the current figure of the GDP growth rate. So we're at 2.98%. It's still not bad. It's a strong indication that we are not in recession and we are far away from recession, even though it's lower than what we had in the first quarter of 2023. That's the first quarter of 2023, but it's still higher than what we had in the first quarter of last year. That's the Q of 2023, where we had 2.31%, but this one we had 2.98%. We should begin to appreciate some of those figures, because we should not be looking at it that all these figures are being manufactured. The truth is that we have seen movements and improvement in economic activities, because the results that have entered the market, released to the equities market in some of the industry, they can attest to the fact that Nigerian economy is also doing well. Even we have foreign exchange issues, but over time, with some of this policy, we believe is still going to impact more and positively in our equities market. So it's also a catalyst in the market. So we're going to see what play out in the course of the week. So we also have this price adjustment in the course of the week. You see it in the slide. By the time we also send it out, Mikio has been marked. May and Baker has also been marked in the course of last week. Those two companies are now exceed. So in terms of our expectation for the week, we expect the new GDP growth rates to also have positive impact on our market performance. Some of the bond investors will see how our economy is doing. So you are likely to see the people taking advantage and taking position with current market price. We also expect to see bargain hunting selected stickers in some of the companies that are also trading below their present value. You could see major activities took place in some of the major banking stock, the Access, DTB, Zenith, and some other companies under industrial and other consumer. People are also taking advantage, the likes of a Nestle. So we also expect to see that the 150 basis point by MPC of the central bank is likely to weaken investors' appetite for now. But the truth is that because the yield in money market and the fixed income is likely to drive more funds from the equities market to that segment of the market. But finally, we anticipate that the all-share index will close in green zone, but could turn around if turn around to be negative if there is a further downward trend in any of the stock worth over 1 trillion, the likes of Seplat, MTN, Airtel Africa. In the absence of that, we're expecting that the market is going to close on a positive note, and then the action to be taken by all our various investors based on the slide on our recommendation. Let's pick on those stocks that are fundamentally sound, and then let's also avoid panic selling on blue chip companies, because if you sell because of the current market trend, it will be difficult for you to buy. By the time you want to buy back, you will buy at higher price, and then don't forget that that will also increase your average cost of holding. Let's take it easy, follow those recommendations. This is not the time to buy, because if you buy, which segment of the market are you going to? Thank you.
All right, so good morning, everyone. Very quickly, we'll look at the fixed income market to see what happened in the previous week. So at the last week, the funding rates are in line with our expectation. We saw that the funding rate, the open buyback and the overnight rates are edged higher, and that was largely due to the outflows from the system. Last week was a very active week, as we saw two major auctions took place. That's the OMO auction and the Nigerian Treasury Bills auction, which mopped up most of the liquidity in the market. And that was despite the fact that we had the FAC inflow last week. So we saw that the funding rate edged by 32.4%. Had about 508.97 billion worth of NCB on offer, and the total subscription at the auction was around 1.5 trillion. And surprisingly, or would I say, in a twist of events, while investors were expecting that with the adjustment in MPR by the CBN, we should see an upward inch in the stop rates. That wasn't the case, as on the 1-year NCB, we saw that rates declined by an average of 1 basis point to close at 20.69 from 20.7% at the previous auction. Whereas on the 91 and the 182 days, papers, we saw an upward trend in yields there as yield advanced by 26 basis points on the 91-day and 45 basis points on the 182-day to close at 16.5 and the 17.45 respectively. So the decline on the 1 year paper, we saw that affect activities at the treasury bills markets as the market closed bullish eventually because we saw some improved demands on that end. As you can see from the table here, 1.5 trillion was subscribed for, but the CBN could only take about 638 billion. So the excess unmet or the unmet subscription had to trickle down to the secondary markets, which improved the elevated demands we saw last week. So that largely contributed to the bullish run we saw on that aspect of the market to make yields decline by an average of 14 basis points to close at 21.97. Now, last week, you also saw that the CBN did a normal auction where we had 500 billion worth of paper on offer. Total subscription was roughly about 1.13 trillion. But at the end of the auction, CBN sold 1.12 trillion. We don't have a table here, but when we're sending out our report, we include it for clients to see to have an overview of how the auction traded. So we saw that the CBN improved rates on that end of the market, largely because they needed to attract more foreign inflows into the system. And we also saw that largely impacted on our foreign exchange market. When we get to the next slide, we'll see how the foreign exchange market played out last week. While for the bonds market, we saw that the activities there was very, very quiet. We didn't see much activity at that end of the market because investors focused their attention largely to the auctions that took place at the OMO and the NCB segment of the market. But notwithstanding, we saw some activities, particularly at the long end of the curve, where investors continues to cherry pick on those bonds that had better yields than the other ones. The most traded bond last week was the 2042, where we saw a number of investors take positions on. On the tenor basis, we saw that at the short end of the curve, we saw a mild advancement in yields by an average of 11 basis points, while from the mid to the long end of the curve, due to the improved buy interest we saw on the long-dated bonds, particularly the 2042, we saw that the average yields declined on that end of the bond. Where at the end of the market, so at the end of the trading session, the market slightly, just marginally declined by 1 basis point to close at 18.78. And like I said, we didn't see much activities at that end of the market. We should see a turnaround in that this week, as we expect that activities will pick up after all that happened at the other segments of the market last week. Last week, we had a comment about a client wanting to know movements in the Eurobond space. So we just included a summary of what happened in the market on that aspect of the market. Last week, the US Fed released the minutes for their last committee meeting, where they had held rate constants. So when the minute was out, we saw that they said the Fed is still committed to fighting inflation aggressively by tightening rates, although they stated that for now, the tendency that rate cuts would be in the play is not possible, as inflation in the US seems to remain elevated. Also, at the last data release, inflation in the US still remained at 3.4% from 3.5% we saw in the month of March. Expectation is that in the month of May, we should see a moderation in the inflation rate. But for now, the declaration by the committee largely fueled activities at that end of the market as investors continue to demand for higher yields. So at the end of the week, we saw that the market closed bearish. Quickly to the foreign exchange market, like I said earlier, the OMO auction brought in some inflows into the system, which further supported our foreign exchange markets. As at the official window, we saw that Naira appreciated by 0.97 basis points to close at 1,482 Naira 81 kobo from 1,497 Naira 33 kobo. Although this is a short-term approach by the CBN to sustain foreign exchange markets, we don't see this being sustainable in the long run, as the higher cost of borrowing is not sustainable by the government, and also is even not advisable. You can't continue to accumulate higher borrowing costs just because you need to stabilize your foreign exchange market. what needs to be done, we all know what needs to be done. We just continue to speak on that and encourage the government to wake up to their calls and to their responsibilities. So our expectation for the week, what do we expect from the system this week? We expect that the funding rates will remain elevated. No significant inflow is expected into the system. So we expect that the levels where the funding rates are will be sustained, while the other markets, the treasury bills market and the bonds secondary markets, will trade in line with system liquidity. And like we've always said, rates are very attractive on the fixed income side of the market. Now is the time for clients to key into the various products that we currently have. The lead fixed income fund, the lead balance fund for clients with dollar funds, the lead dollar fund, and for clients that have each dollar funds, the Eurobond market is also something they can look into. So particularly with this lead result portfolio, it's a fixed deposit product whereby clients have the opportunity to fix their funds for an agreed tenor and at an agreed rate. These various products are there for you to take advantage of the current attractive rates in the market. And very quickly, today being the Children's Day, I know, just to wish all our children happy Children's Day. We're coming up with a product, specifically targeted at children. And once the product has been completed, we'll send out a broadcast message for that. We're just calling on all parents. Now is the time to secure the future of your children by making plans for that. With this, we've come to the end of our presentation. If there are questions, clarifications, inquiry, we'll take them now. Thank you. Questions, inquiries. We have someone. Mr. Peter, you've been unmuted. Can you ask the question?
Hello, yeah, thank you very much, Lake Securities. I want to ask a question on treasury bills. The 7.5% VAT, is it paid at the primary market, or even when you buy at the secondary market, you will still pay that VAT? So I'm trying to ask that should you not be able to get at the primary market and you want to buy at the secondary market, will the 7.5 also be applicable to you?
Okay.
Thank you.
All right. Thank you, Mr. Peter, for the question. Securities are actually tax-free. So you're not going to pay tax, withholding tax, or VAT on treasury investments in treasury bills. They are tax-free.
Both at the primary market and at the secondary market.
That's correct, sir.
Thank you very much.
You're welcome, sir. Okay, Mr. Gabriel, you've been unmuted. You can ask a question. Mr. Gabriel.
Oh, I'm sorry, I was talking to a muted phone. Good morning. Can you hear me?
Loud and clear, sir. Good morning, sir.
Yeah, good morning again. So I wanted to find out just, I know last week we got this report about Thursday or Friday. I don't know whether you can send it, just as we finish today, send to subscribers so that at least people can take their decision based on the conversation that we've had. So that's yeah.
Oh,
so that's the first thing I wanted to possibly maybe chip in. Thanks.
All right, sir. Thank you so much for that feedback, sir. We'll ensure it comes out. It goes out as soon as the meeting is over, sir. Thank you very much. Okay.
I think there are questions.
Okay, we have a question here. Where would you advise a novice to take position in this time? The equities market or the fixed income market?
Okay, thank you. It depends on the investor's objective. If your objective is long-term, for now, I advise you go through the equities market because its prices are cheap. If your objective is also short-term, you wanted your money within a short period of time, we advise you also go through the fixed income market where we can buy treasury bills for you. You can also invest in our mutual funds as well. And then you can also have a combination of both. If you have a short-term objective and long-term objective, you can have the equities component and the fixed income component in your portfolio, which is a very good practice across the globe. Thank you.
All right, thank you very much. Just to add to that, the keyword there is a novice, which means you are new to the market, and it won't be a good taste or a good welcome, or yeah, a good thing to come into the market as a novice, and then the first thing you get to be welcomed with is loss in value or loss in share price and all that. Just like my colleague has said, you can start off with the fixed income market, you have happenings in the market, then you can then diversify into the equities market. Mrs. Titi Lola Oladejo, you can ask a question. Your mic has been unmuted.
Thank you so much, and thank you for the good work you're doing. Somebody asked a question on the VAT or the withholding tax on T-bills and the bonds that you purchase. I have had that story. A lot of my clients have asked me that, and I can't reconfirm it. But I know I saw a publication on it. So if you can help us reconfirm, maybe in the next meeting or maybe in your newsletters, we'll be glad.
Okay. Okay. All right. Thank you so much. I think also I saw something similar that should be about 4 weeks to 4 weeks ago, where we saw that stamp duty would now be charged. Then that's more of stamp duties, or we'll get the clarification around that as regards how or the modalities for charging the stamp duties. But for VAT, I'm very certain that it's actually free for the stamp duties. We'll just would investigate further and get clarity on that, man. Thank you. So by the next meeting,
thank you so much.
All right. Thanks for the updates for this morning. Thank you so much. We are very grateful. I find our updates very insightful. Another question: what will you suggest in terms of dollar cost averaging strategy? One thing we try as much as possible to avoid as a company is giving a certain direction. No, we can give you the whole fundamentals around happenings in the foreign exchange space, but we try as much as possible to be very careful, to give a concrete direction as to what clients are expected to do. We can just give you the fundamentals around that. We've seen that in recent times, the CBN has been very intentional with attracting foreign inflows into the country, which is evident in the rates on the OMO segment of the market. At the last auction on the 1-year bill, we saw that rates we saw that rates was as high as 22%, 22.49%. It's just best that we continue to monitor the market. We see what the CBN is doing. Also see the actions being taken by the fiscal side of the market, for us to know what directions to take. But we can't categorically say that, okay, you should do this, you should do that. We only advise you based on what is currently available in the market, and then you key into those opportunities. But for now, the Eurobond space is still a very good one. Rates are still a bit high. With the interest rate in the US, so we can see that yields on that end of the market is still attractive. That's somewhere you can go into to enjoy a very good opportunity for your dollar funds. If there are questions, the floor is still open for questions, clarifications, inquiries.
That other one, I think, how can you give someone? Okay, sir, please, we'll take note of your details. Our customer service will reach out to you on that, sir. They will give you the guidance on how to achieve that, sir. On what index funds are currently available? I think for now, apart from the other instruments that are also listed in our equities markets, a couple of those funds are the mutual funds. ETFs, exchange traded funds, and we have a couple of some of those funds. So what funds also use is to also serve the purpose of the index. So if you invest in some of those funds, and because they also have something to capture, like the banking, there's a particular ETF that capture banking. So if you also want to invest in the index fund, you can also buy into those ETFs, like ETF banking, ETF consumer, and a couple of some of those ETFs.
All right. Thank you so much for everyone who took out the time to join the session this morning. We appreciate your time. And with this, we've come to the end of our presentation. Thank you.